Welcome back to Investing Talk podcast. Today, we're tackling a question many of you have asked. Is Spectral AI a good time to buy now? This is a company specializing in AI-driven wound diagnostics with some really interesting developments. Before we dive into the details, just a reminder, please subscribe, like, and comment to support our show. It really helps. And if you'd like us to look into a specific company, please, leave a comment below. Your engagement helps us bring you more analyses like this one. Okay, let's unpack this company, Spectral AI. We've gathered some comprehensive sources to help us understand its current situation, its potential, and, the risks involved. We'll be looking at everything from its financial health to upcoming catalysts and analyst sentiment.
Yeah, and what's fascinating here, I think, is that Spectral AI, or MDAI, it presents a classic high-risk, high-reward scenario, especially for those interested in the healthcare technology space. We'll definitely explore why the market view seems, well, so divided on this one.
That's a great way to put it. So before we even get into the numbers, let's establish what Spectral AI actually does. What's their unique selling proposition?
Right, so Spectral AI is a small-cap healthcare tech company. They're really focused on AI-driven wound diagnostics. Their main product, their flagship, is called the DeepView system.
DeepView, okay.
Yeah, and this system, it actually received FDA Breakthrough Device designation.
Oh, wow.
Which is, a pretty significant advantage when it comes to regulatory review. It speeds things up potentially. It's designed for clinical application in emergency and burn care settings. They're really aiming to be a leader in burn wound AI diagnostics.
Okay, so using AI to get a better, faster look at burns in places like the ER sounds very cutting edge. But innovation needs funding, right? So, all right, let's talk numbers. What do the financials tell us about Spectral AI's current health?
Well, okay, looking at the fundamentals,
Okay.
it's a mixed picture, honestly. On the one hand, you've got revenue. They reported $29.58 million in 2024. That's a notable 63.83% increase from the $18.06 million in 2023.
That's pretty significant growth, 63%.
It is. That's strong top-line growth, definitely. Shows interest. However, the company remains unprofitable. Net losses were negative $15.32 million in 2024.
Still losing money then.
Yes. Now, that is an improvement from the loss the year before, but it's still, a loss. A significant one. The earnings per share, the TTM, it stands at minus 0.66. And there are no positive earnings projections from analysts just yet.
Negative EPS, no profit in sight.
And here's where it gets really interesting, or maybe concerning, depending on how you look at it. Their liquidity ratios.
Ah, okay. The short-term health.
Exactly. The current ratio is 0.87, and the quick ratio is 0.74. Both are below 1.0.
Which isn't good.
No. It indicates the company might actually struggle to cover its short-term liabilities with its current assets. Tight cash situation. And interest coverage is makes 3.33. Negative. Meaning they're not generating enough operating income even to meet their interest obligations on debt. Profitability metrics like return on assets, that's make it 55.02%. Return on invested capital, even worse, negative 177.64%, just weak across the board there. And cash flow remains negative, which really highlights their reliance on, external funding. They need cash from outside.
Okay, so pulling that together. Strong revenue growth, which is positive, but still losing money. Facing liquidity stress, negative cash flow. Wow, that really is a mixed bag. What does this mean for their competitive position? I mean, healthcare tech is tough.
It is. And despite their innovative technology, that DeepView system and the FDA Breakthrough designation, they are pre-profit.
Yeah.
And they're definitely up against larger, much more established medical device firms.
Yeah.
Companies with, deeper pockets and wider distribution networks already in place.
The incumbents?
Right. So their long-term competitive advantage really depends heavily on successfully commercializing DeepView and continuing to differentiate their product, keeping that edge.
Given those negative earnings you mentioned, how do we even begin to value a company like this? Like, PE ratio is out the window, right?
You've hit on a key point, exactly. Traditional valuation metrics, PE, forward PE, they're just not meaningful here because the earnings are negative.
So what can we look at?
Well, we can look at the price-sales ratio, the PS ratio. It's currently 1.66. Now, what's interesting is that's actually slightly below the wider medical device sector average, which is usually around, say, 2 to 4.
Suggesting it might be undervalued on that metric? Or just risky?
More likely pricing in the risk, I'd say. It suggests a discount, probably due to the company's losses and that inherent risk profile we've been talking about. Price book data isn't really available or meaningful either, given the accumulated deficits.
Yeah.
And you won't find comprehensive discounted cash flow models or solid relative valuations widely available. It just reinforces that this is a high-risk, speculative play right now.
Okay, so valuation is tricky, heavily discounted due to risk. What about the stock price itself? For those watching the charts, what has Spectral AI's stock been doing lately? Has it been choppy?
Oh, absolutely. Volatile is the word. Its most recent trading range was, let's see, $1.98 to $2.14.
Yeah.
But the 52-week range is much broader. 0.82 cents all the way up to $3.25. So big swings.
From under $1 to over $3. Wow.
Yeah. And the stock recently had a significant bounce off those yearly lows, near that $1.82 mark. Its beta is 0.90, which technically suggests slightly lower market volatility than the average stock, but
The range tells a different story.
exactly. This is a very active stock. Recent volume was around 463,000 shares.
Yeah.
People are trading it. Technically speaking, you see support near that $1 to $1.20 zone, the 52-week low area. Resistance looks like it's around $2.50, maybe intermediate, and then the $3.25 level, the 52-week high. The indicators, these suggest it's coming out of oversold territory, but it's still kind of in a recovery phase. There's no established upward trend yet. That volatility really points to a speculative profile, likely driven quite a bit by retail traders.
That high volatility and reliance on retail sentiment certainly makes it interesting, maybe nerve-wracking. What kind of news has been impacting it, and what are the analysts saying, if anything?
Right, news is key here. So back in August 2025, Spectral AI reported Q2 earnings. And the numbers weren't great. Revenue dropped 32.3% to $5.07 million.
A drop after that big growth year.
Yeah, and net losses widened sharply to $7.97 million for the quarter. As you'd expect, the stamp price declined pretty heavily, 38.29% after that report. Investors were clearly concerned.
Understandable.
But despite that, the CEO did highlight progress they're making in other areas, like quantum computing and some defense-focused AI initiatives, trying to paint a broader picture. Then a bit earlier, in June 2025, they made that big regulatory move we talked about, submitting the FDA de novo 510K for DeepView.
The filing for the novel device.
Exactly. That's a critical step for a device like this that doesn't really fit existing categories. It's unprecedented in that sense.
So a rough earnings report, but a potentially crucial regulatory step forward. What does this all mean for the immediate future? Are there any big events, catalysts on the horizon that could really move the stock?
Absolutely. Upcoming catalysts are, well, everything for a stock like this at this stage. Short term, the big one is the Q3 earnings report. That's scheduled for September 30th, 2025. Everyone will be watching that closely for any clarity on revenue, hopefully stabilizing, and maybe, just maybe, narrowing those losses. Also, any new regulatory updates about DeepView or maybe news of a partnership could definitely trigger volatility.
Okay, Q3 earnings end of September. What about a bit further out?
Midterm, October 31st, 2025. That date marks an important FDA review milestone for DeepView. Even early signals or communications from the FDA around that time could cause significant price movement up or down.
High stakes there. And long term?
Long term, the really big potential drivers.
Yeah.
Full FDA clearance, obviously. Then the actual commercial launch of DeepView. After that, potential acquisitions or licensing deals with bigger companies. And finally, material adoption, getting health systems or insurance payers to actually use and pay for it. Those are the major potential inflection points.
That's a lot of potential news flow. What about analyst sentiment beyond that one strong buy? And insider activity. Are people in the know buying or selling?
Well, as I mentioned, currently just that one analyst rating it a strong buy with a $3.50 price target. That implies about 67% upside from current levels.
Sounds good, but it's just one analyst.
Exactly. And crucially, there are no major upgrades or downgrades from the larger institutional firms, and no recent large-scale institutional coverage reported either. That lack of broader coverage is notable. On the sentiment side, social media is mixed, but there's high message volume, particularly on speculative platforms like StockTwits.
Typical for these kinds of stocks.
Very typical for high-risk, low-float stocks. Lots of chatter, lots of speculation. There are also rumors floating around, and I stress these are rumors unsubstantiated about things like accelerated military contracts, potential strategic partnerships, maybe a fast-track FDA review.
Wishful thinking, maybe?
Could be. Or maybe insider buying ahead of regulatory news. But again, these are just rumors you see online, nothing concrete.
Okay. So with all this potential, the innovative tech, but also the financial fragility and the rumors, there are always risks. What should our listeners really be aware of? What could go wrong here?
Yeah, that raises the crucial question. What are the primary risks? And there are several layers. First, Stock-specific risks. The company faces those continued operating losses and, critically, an ongoing need for more funding,
Cash burn.
which means dilution. That brings the risk of equity dilution, yes. If they have to keep selling shares to raise cash, existing shareholder stakes get smaller. Then there's significant regulatory risk. That FDA decision on DeepView is not a sure thing. Approval could be delayed or denied. And commercial risk, too. Even if it's approved, will hospitals adopt it quickly? Will competitors leapfrog them? That's a risk. And we can't forget those low liquidity ratios we discussed, the current and quick ratios. That highlights immediate financial risk.
Okay, company-specific risks are clear. What about broader market stuff?
Right, there are market and sector risks too. General volatility in small cap stocks, especially pre-revenue healthcare or tech stocks. Market sentiment can shift quickly against speculative growth companies. And changes in healthcare policy, reimbursement rates, or regulations could also impact them negatively. It's not just about the company itself.
So a lot of moving parts, significant risks, especially around funding, the FDA, and just getting people to buy the product. Bringing it all together then. Based on all these sources, the analysis, what's the overall rating or thesis on Spectral AI? Is it, bottom line, a good time to buy now?
Okay, considering all these factors, the potential, the financials, the risks, the catalyst, our sources seem to converge on an overall rating of, let's say, 4 out of 10.
4 out of 10, so not great.
Not great for a core investment? No. Look, Spectral AI has made revenue progress, undeniably, and it possesses unique technology with that important FDA breakthrough designation. That's the plus side. However, it remains, cash-constrained, unprofitable, and highly speculative. Liquidity is weak. There's a high risk of further dilution and continued operating losses. That's the minus side.
And the analyst target.
Well, while that one analyst price target suggests significant upside, it seems mostly based on future potential, on hope, rather than on established, solid fundamentals right now. Technically, the stock is volatile. Sentiment seems driven more by retail speculation and rumors than by, say, strong institutional conviction. Therefore, the conclusion really is that it's best suited, if at all, only for short-term, high-risk trading.
For traders, not investors, perhaps?
Pretty much. People who understand the risks and are prepared for extreme volatility. It's definitely not recommended as a long-term investment until we see profitability, stronger liquidity, and clear commercialization milestones actually being hit.
That provides a very clear picture for our listeners, I think. So while Spectral AI holds genuinely exciting technological promise, the kind that could really impact healthcare, the current financial and operational realities present a very challenging alternative for potential investors right now.
Absolutely. The path to sustained value creation for Spectral AI really hinges on them achieving those critical commercial partnerships and successfully navigating that complex regulatory landscape. Until those pieces fall into place, it remains a high-stakes bet. The odds are still very much uncertain.
Yeah, it really highlights something important, doesn't it?
What's that?
Just how crucial it is to differentiate between an innovative technology, something truly cool and potentially world-changing, and a sound investment at a specific point in time.
Exactly. An exciting future doesn't always mean a profitable present, especially in this field.
Right. You need both the science and the financial foundation.
Precisely. Brilliant science needs solid ground to really take off as an investment.
Well put. Thank you for joining us for this look into Spectral AI. We really hope this helps you, our listeners, make informed decisions. Until next time, keep learning and happy investing.